Hi, welcome to the Market Alert for Thursday, the 14th of May 2020. So stocks and bond yields tumble on Beijing blowback, a fearful Fed and billionaire alarm bells. Do not panic. Well, let's have a look. Yesterday, the Fed said, when Powell spoke, that Fed not looking at negative rates. So again, it's just reiterated here, not something that they're looking to do. Well, let's have a look in about 3 months' time, shall we? Remember this and see what the situation is then. But I think you'll find it may be a completely different story. So let's have a look at the market's reaction to what Powell said. They weren't thrilled by this because obviously the market wants negative rates. It wants QE. It wants anything it can. It wants the Fed to buy stocks. And that will be part of the next phase. You wait and see. Same as Japan. Japan's central bank owns 3/4 of the stock market. It's how you manage to take control. So yesterday in the daily chart, we've seen prices moving lower the last few days. The market taking out the 76% retracement. And let's just have a look at the next downside level, which is going to be 22,938. So just below the 23,000. We get below this, we start heading down towards this sort of level here, where we will just draw in a couple of fibs. So this level, if we break, and as the old adage says, sell in May, go away. So watch the 22,938, then the 22,253, 21,655 if prices move lower. And also the 50 bar moving average is there as well that needs to be taken out. So yesterday, let's have a look. Let's go back to the pre-market session. The market managing to sideways to higher. It was quite a choppy pre-market session, but trading up to the DP level and then selling off in the first part of the session just prior to it coming through the 200 MA. This became resistance. They managed to bring the market back to the 200 MA, but as soon as we closed below it, and then Powell's comments, the market then moved to the downside, which we can see here. So 100, 200, 300, 400, 500 points lower, 650 by the time we've finished, but the market then moving back. Actually, it's 550 points, and then the market moving back towards the end of the close there, but not by a great deal, just a couple of 100 points. Which is quite amazing, really. This time last year, it'd be lucky if you get 100 points a day, and now we're looking at 300-400 point moves in the pre-market sessions, just to show how much volatility is in this market, and rigging is going on in the futures market and in the pre-market sessions. So the market is stuck in a bit of a range at the moment, 150 point range by the looks of things, up and down. It will need to take out the 200 MA if it's going to move higher. And certainly is going to need to take out the DP level, which we see here as well, if prices are to move back to the upside. So news today, let's have a look. I'm going to go to the Forex Factory because there's something interesting here. I only had the high impact news items highlighted and selected, and what was interesting was that there was no sign of the unemployment claims. It looks like 2 million of the prospect of 2.5 million more jobless claims has been downgraded to a medium impact. I wouldn't call that medium impact, which is why I couldn't see it. Thought they'd stopped reporting on this because the Fed do this. They do. You'll be amazed how many things they stop reporting on. As far as data collection and whatever. When it becomes unfavourable, it's amazing how it gets left and not updated. And you'll know that if you've seen any market alerts before about money supply, bank liabilities, that sort of thing, where I've covered this in the past. So, we've got the weekly initial job claims, and we've also got Crazy Bailey. He's out at 11:30. Just the two today, so keep an eye on these. It'll be interesting to see what he's got to say, given the devastating news yesterday in the UK about the economy and the GDP, etc. So yeah, yesterday was an interesting one as well. I'm going to cover this in a separate video because there was so much going on that it's just not enough hours in the day to try and cover it. But the GDP yesterday, let's just have a look at the graph, and if it turns up, there you go, and you'll see it fell down to the 2008 2009 level. However, this only accounts for 1 week of lockdown in March, so the next one on this could be minus 20 plus, which we'll see next month. So again, keep this in mind. What they're talking about in the media is only half of the information. This is only for 1 week of the lockdown, the -2 there. And yeah, let's have a look at the implied volatility before we conclude. And you can see that we're up to 32.24. They're starting to break out, heading towards the 20 bar moving average there. And if we look at the color version, you will see that we're now on amber, and the potential to move lower in prices because we've closed below the 20 bar moving average. We're now on the amber here for a potential move to the downside for the stock market. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.